Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you can find across the markets today. What I do is two things. I teach traders through a course at LazyGapTrader.com how to identify and calculate the specific price levels where stocks that are gapping higher or lower at the open will be drawn to and have a price reaction from in the other direction. Gap trading is a very predictable strategy. Stocks are gapping higher or lower at the open. It creates an opportunity for traders. Traders need volatility, and with volatility comes the opportunity we're looking for profit. When stocks are gapping higher or lower, they're going to find support or resistance at a particular price level. In the course, you learn how to calculate that very specific price level. Obviously, what you're looking at on the screen is a chart of Bluebird Bio, and you can see down at the bottom, 104.92 was the level. We're going to go over this trade in a little more detail, but first I want to show you the second thing I do, which is give traders an opportunity to get my gap trades each and every day at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the market even opens for trading. Here's a copy of the email that went out this morning, and you can see it went out at 9 o'clock a.m. And what I do is identify the possible morning gap trades for the day. So here are the 4 possible trade opportunities we had identified this morning. Bed Bath & Beyond, Hain Celestial, Bluebird Bio, and Bellicum Pharma BLCM. Out of these 4, one hit its price level today, and it was Bluebird Bio. I say gap lower. Support levels are 104.92 and 99.10 if the stock was to trade lower. Stop and profit target is about 40 to 75 cents. These are minimum profit targets. One thing you have to keep in mind with this list, we're only interested in taking the highest probability trades that we can find. Therefore, we're only interested to trade the stocks that come into the price levels that we calculate before the market even opens. If they don't hit the price level, we don't want the trade. It's not a high enough probability for us. Let's go back to the chart of Bluebird and pick apart the trade. Here we're on a daily chart. We just want to see where the stock closed the prior trading day yesterday. The stock closed at 118.50 and was trading lower at the open. Here we're back on the 10-minute chart, and you can see here where the stock opened today at 110.35 and immediately traded lower. What happened? It came into the 104.92 area, making a low for the day of 104.90 just by 2 pennies. And then what happened? It had an immediate bounce higher. In fact, it had a rip higher all the way up to a high of 113.30 before pulling back. That's over an $8 rip higher off of the level identified before the market even opened for business. A couple of things that are extremely important on a trade like this. You never know which stocks are going to give you the huge gain right out of the gate. So in my course, what traders learn how to do is turn a trade like this into a risk-free, emotionless trade, allowing you to capture the majority of the upside all the way, like in this case, up over $113 a share from a buy level of just below 105. It's a very simple and easy strategy for every trader to employ within their trading techniques. The other thing that's extremely important is the ultimate question. How does this work and why does this work? Well, obviously, everything that answers those questions is discussed in the course, and traders learn exactly why this works. And that's what's important because it gives them the confidence. It gives you the confidence that when a stock reaches a specific price level, it's going to have a reaction in the other direction under most conditions. Traders learn why this occurs at certain numbers, and once they take the course and understand why this occurs, it becomes vividly clear and absolutely impacts their day trading in a very positive way. It's also the difference between coming into the trading day with a specific plan, knowing exactly what you're going to do if certain stocks reach certain prices. It's completely different than looking for a trade. In this case, with gap trading, we're only interested in waiting for the specific trades to come to us. Why? Because we know that it's going to be a high probability trade. It's a totally different mindset that most traders have, but it's also one that they should have. As day traders, we have to take trades on our terms, not the market's terms. That's a recipe for success. Taking trades on our terms. And that's exactly what the information in the course at Lazy Gap Trader provides. How to take trades on our terms. This is a strategy that traders can use for the rest of their trading career. Come over to lazygaptrader.com, check out the course, and you should know that any trader that takes my course gets my full and complete support for as long as they want it and as much as they want it. I'm David Frost, lazygaptrader.com. Thanks for tuning in, traders.